Hi guys, today I want to talk to you about how to trade volatility in shares of NIO and Tesla to make huge profit with not that much money. As you know, Tesla stock and NIO stock have been on absolute tear lately. NIO stock was hitting everyone's eardrums just a few weeks ago, and Tesla stock, oh my god, Tesla stock just went parabolic recently, with people on financial and other channels such as CNBC, Bloomberg or BBC just can't stop talking about it. Even President Trump's tweets got shoved under the rug because people just want to talk Tesla. But at the same time, people hit me back all the time by saying, look man, I can understand trading NIO because the stock is trading at around like $3-4. But for God's sake, how do I trade Tesla? The stock is at $750. And that's exactly why I wanted to make this video and show you the techniques on how you can trade NIO and Tesla with not that much money and make great profit. Let me tell you guys, for a trade at this volatility in NIO and Tesla shares is an absolute dream. Speaking of traders, I have to mention this before we dive into more advanced and fascinating stuff. Today's traders are not your typical traders of the past, who were only known by trading penny stocks or the same few stocks during the day. By statistics, very few of those traders make money. Rather, today's traders are doing everything. For example, investing. They may have a number of solid long-term positions that do well over time. They know about bonds and dividend investing, or they do swing trades. So besides having a solid base with long-term positions or dividend-paying stocks, they can also do trades, like trades that they can hold for a couple of days or weeks. And what's more, these pros do options and all kinds of option strategies. I call these traders invest traders. So comparing the traditional investors or day traders with these invest traders is like comparing boxers or wrestlers to MMA fighters. These guys use all kinds of tools and strategies available to them instead of using just one single strategy. What's more, and it's very important, these guys hedge themselves against potential losses. And I try to be this kind of an invest trader because instead of day trading, which I consider a losing strategy, I am trying to make money on obvious opportunities that the market presents. So recent volatility in NIO and Tesla shares is the kind of opportunity that the invest trader such as myself is looking for in order to make money. And guys, I'm not even talking about catching the right price or whether Tesla shares or NIO shares could go up or down. All I want to talk about is taking advantage of the volatility that is present now in NIO and Tesla shares. To be more precise, taking advantage of implied volatility, which means inflated option prices for calls and puts. So let's go through some scenarios of how we can take advantage of this. Scenario 1. Let's say you think that Tesla shares can bounce back to $800 area in the next 2 months. But you don't want to buy Tesla shares because, first of all, it's very risky. Second, it ties up a lot of your capital. Or third, you simply don't have the money to buy those expensive Tesla shares. Well, then options are a way to go. Here's an example of what you can do. You can buy March 20th, 775 strike price, one call for $74.30. Are you in panic mode yet? You're probably thinking, are you kidding me? Since one contract represents 100 shares, I would have to pay $7,430 for this one contract. And if the price of Tesla is not over $775 by March 20th, my option becomes worthless and I'm going to lose $7.5 grand. I could live a full year on this money in my parents' garage. Okay, calm down guys, we're not there yet. Here comes the beautiful part, something that is called a bullish call spread. Have you ever bought a new car and traded your old car to offset the price of buying a new car? For example, you bought a car for 30 grand and you've traded in your old car for 10,000. essentially offsetting buying your new car by 10,000. So your new car, instead of 30,000, now costs you only 20,000. It's a very similar thing with a bull call spread. So instead of just buying a call for $74.30 and risking almost $7,500, you offset the price of this call by selling 800's call for $65.62. Thus, 74.30 minus 65.62 equals $8.68. So your bull call spread only costs you $8.68, but since one contract equals 100 shares, it only costs you $868. Wow, that's better. So let me recap, guys. Buying one Tesla call for March 20th and strike price $775 would cost you almost $7,500. Instead, buying one Tesla bullish call spread for strike price $775 and selling 800's call would only cost you $868. Wow, this is almost 10 times less. But there is a catch. Of course there is. Well, the catch is that when you buy a call spread compared to just buying a regular call, your potential gains are limited. Maximum you can make on this trade is $1,632. So if Tesla goes above 800, you're not making more money. But at the same time, if the stock price of Tesla falls, you're risking 10 times less that you would normally risk by just buying the call. And remember, guys, if you didn't get something from the first time, just rewatch this video and a few times, subscribe and write me some comments, and together we'll make sure that you understand these concepts and use them to make money. Let me show you how you can enter this order in a real-time application such as AmeriTrade's thinkOrSwim. Okay, let me show you guys. So you are buying a $775 strike price call for $75.60. So you click on the ask price as you see here. Ask price is $75.60. Click on that, and at the same time you are selling 800's call for $64.50. So to do that, you just press the control key, CTRL key, and click on this price, $64.50. As you can see, the second line appeared, and just change this to be one call. Okay, so buying March 20th 775 call and selling March 20th 800 calls. Okay, and click confirm and send, and here you can verify what you're doing. Again, this is called a vertical call spread. Break-even stock prices are $783.68. Maximum profit $1,632. Maximum loss is $868. Okay. Notice, guys, the buying power effect is very little. It's pretty much equals to your maximum loss of $869. Okay. After that, you click send, and voila, your order is in, and when it will be executed, you'll get a notice. That's it. Scenario 2. For this scenario, I'd like to use NIO as a guinea pig. Let's say you don't want to buy NIO shares and you don't want to buy calls or bull call spreads on it. Rather, you think that NIO will trade in the current range for the next, say, 1.5 to 2 months. But again, you want to take advantage of this recent volatility in NIO shares. In this case, what you can do is sell a bullish put spread. I know it sounds like a bunch of words with no meaning, but as you will see, it's not that bad at all. First, you need to understand what selling a put means. When you sell a put at a certain strike price, you have an obligation to buy this stock at that strike price if the price falls below the strike price or the buyer of the put decides to exercise it. So for example, NIO is trading right now at around $3.81. So you can sell March 20th third put for 22 cents. Let's say you sell 10 contracts. If on March 20th the price of the stock is, for example, let's say $3.30, then this put expires worthless and you keep the premium that you got for this put. That would come out to be $220. How do I get this? Here's the simple arithmetic. 10 put contracts that you've sold times 100, each contract represents 100 shares, times 22 cents premium for the put equals $220. But if on March 20th the price of the stock is, let's say, $2.90, then you will be assigned 1,000 shares since you've sold 10 contracts at $3 strike price. However, you still keep the premium of the put, so your true price of the ownership of the stock is $3 minus 22 cents, which comes out to be $2.78. That's what happens when you just sell a put. Now back to selling a bull spread. Bull put spread is almost the same thing as selling a put, except you're adding an additional leg to hedge yourself from further losses. So in other words, besides selling March 20th third put for 22 cents, you buy 2.5 put for 10 cents for the same number of contracts. This way, if the price of NIO keeps going lower and below $2.50, you're protected. You cut into your gains, but at the same time you limit your losses. Another reason for selling a bull spread versus just selling the put is the fact that a lot of brokerage houses will remove a significant amount of your option buying power if you're just selling a put. But if you sell a bull spread, your brokerage knows that you and them are protected from further downfall in the price of the stock. Therefore, they will remove very little from your option buying power. Let me show you what I mean in real life example in AmeriTrade's thinkOrSwim application. So let's say you just want to sell a third put on NIO. So you just click on this column, March 20th, third put, okay, which is trading at about 23 cents. You click on this, on the bid, you see the line appears. Okay, you just click confirm and send, and here you can check your order. Sell 10 contracts of NIO, March 20th, third put for 21 cents, and maximum profit of $210. Maximum loss is $2,790, because if you're assigned shares and NIO goes to $0, that's how much you would lose. And the cost of trade including commission is $210 minus commissions. Okay, so notice the buying power effect is $1,193. Okay, so let's just cancel this. And if you want to do a put spread, then as you see this strike price 2.5, you just click on just hold the control key and click hold the control key and click on this ask on this 12 cents, and as you see the 11 cents automatically appears. Checking the order, selling third put and buying 2.5 put, clicking confirm, and in the confirm you can see that maximum profit on this trade is $110, but maximum loss is only $390. Remember guys, the losses are capped. Okay, and as you can see, the buying power effect is only $397. And if you remember, if you just sell a put, it's the buying power effect is over $1,000. So very reduced buying power effect. I mean, you would make more money by just selling a put, yes, but at the same time, your losses are not kept, and if stock goes to $0, you lose the whole thing. I mean, how unlikely this could happen? It could, but here it is. You're basically hedging your position, and in the buying power effect is much less. So you can do other trades with your buying power. Okay, that's the thing I wanted to show you about selling a bull put spread. Scenario number 3. Let's say you want to own Tesla or NIO stock, or already do, but only for a short term, and you're not sure if the price of this stock will appreciate that much in the near future. At the same time, you do want to make money holding the stock or protect from the downside movement. In this case, you can buy the stock and sell covered calls. A covered call is an option strategy involving trades in both the underlying stock and options contract. The trader buys or already owns the underlying stock. They will then sell call options for the same number of shares held and then wait for the options contract to be exercised or expire. So in other words, let's say you buy 1,000 shares of NIO stock for $3.81. Then you can sell 10 call contracts of March 20th expiration for the strike price of $4.50 for 38 cents. This means that if by March 20th, which is your option expiration day, the stock price will be higher than $4.50, say $4.60, then the stock in the option position will be taken away from you. But here's how much you would make on it. $4.50 minus $3.81 plus 38 cents times 1,000 shares equals $1,070. But if stock price stays by expiration at say $4.20, then you just keep the premium of the call that you've sold, which is 1,000 times 38 cents equals $380. You keep the stock and be ready to sell the next call again. So let me recap, guys. We talked about 3 techniques you can do to take advantage of recent volatility in NIO and Tesla shares: call bull spread, put bull spread, and covered calls. And if you didn't get something from the first time, guys, that's okay. Just go through this video a few times, write me some comments. I'd love to answer your questions. And please, don't forget to subscribe and click the like button because it really helps the channel grow, and I will see you in the next video.